Well, thank you. It's really a pleasure to be here with all of you. And part of my talk has already been done by the prior speakers. That's great. I'm going to tell you the story of my personal journey from finance to slow money. So some of you might recognize this. I encountered it 25 years ago when I started studying finance. It's an efficient frontier. It's a very iconic construct of conventional finance that rests on the belief that all you need to know when you make an investment is what is the return, what is the risk, and what is the liquidity of the investment. And that's all you need to know. And the understanding is the higher the return, the better. The lower the risk, the better. And the higher the liquidity, the better. I call this the narrow lens of finance. And, coming from 6 years of studying theoretical math, this actually looked like the real world to me at the time. Of course, the real world looks more like this. And you see a tree, but you really need to understand it as embedded in a very dense network of relationships. And I'm just mentioning a couple since some speakers have already mentioned some others. Obviously, it relates to our own breathing. We breathe oxygen, which is produced by the trees. The tree is in a mycorrhizal relationship with the mycelium, with the fungi in the soil that extends the reach of its roots and exchange nutrients with it. And of course, a tree is in a relationship with hundreds of thousands of organisms that view the tree as their habitat. And yet, when you see the tree through the lens of finance, this is what you see, right? You can only see the commodity value of lumber. Another way of saying this is that according to finance, a tree is worth more dead than alive. And so you have a transformation of a place that looks like this into a place that looks like this. And this is an image that is painful at different levels. On one hand, you could say, what a waste. Whatever money was obtained from that operation, it could not possibly represent the value of a place like this, especially if you think about the future generations that will never get a chance to walk there. Or you can think about that when this forest was torn into this, a little piece of you died. And yet think about this, from a financial standpoint, if an investor had paid $10 million for this forest and obtained $12 million from the wood, and that operation had been done in a year, you would have gotten a 20% return. In 6 months, a 40% return annualized, and in 3 months, an 80% return. Remember the first slide, the higher the return, the better. And you can see a sense of haste in this operation. And actually, one of this transformation was behind my decision to leave the finance world in 2008. I was actually working for a very well-established investment management firm. It was actually managed professionally and ethically. And I was part of the investment management team in the emerging markets group. And we were managing money primarily for endowments and foundations. And I remember looking at one of the best performing stocks in the portfolio. It was a palm oil company in Malaysia. I did a little bit of research and found out that this company had taken down tens of thousands of acres of original rainforest and planted this. And by the way, they also got carbon credits because they were planting trees. And so I remember talking to the director of an environmental foundation's investment pool, and I was saying, are you not concerned that the money of your foundation is invested in a company that has just destroyed the natural habitats that your foundations was created to protect? A little bit of an awkward moment right there. And he said, well, actually, my task is to preserve the assets of the foundation in perpetuity. By the way, a luxury not afforded to the rainforest, and I have to generate enough return to pay for the functioning of the foundations and its programs. And at that point, I realized there is something systemic here that is amiss, and I cannot be part of this system. So I walked away from that job, very hard thing to do actually in 2009, in the middle of an economic recession, leave a very high-paid job, but I had to do it. And that launched me into a study of the large systems, financial, economic, monetary, and banking system, which in aggregate force us to behave collectively in a very destructive way. And so I want to spend a few minutes giving you a taste for what I found in terms of the banking and money system, which among all three of those is the least understood, the most brittle, and the most dangerous to society, in my view. So here it is. You get 1 day workshop in 3 minutes. All money is created as debt. The only exception are the coins in your pocket. And in fact, more than 90% of our money supply is created by the private banking sector out of nothing with accounting entries when they make loans at interest. What? Yes, this is a couple of consequences. The first one is that we do not have a permanent money supply because every time loans are repaid or defaulted upon, the money supply shrinks. And that's why, by the way, austerity is not working and Europe is funding out the hard way. The second thing is the private banking sector decides with that money, the first use of the money they create by lending it into existence. And in the last 10 years, they created a big real estate bubble by lending a lot in that sector, and now they are inflating a financial assets bubble. That's why the stock market is doing very well while the economy is not. Second point, and this is the biggest flaw, design flaw of the monetary system we have, no money is created ever to repay the interest on that debt. This forces us on a continuous path of growth in the economy and in our monetary base because we need to borrow more next year than this year to repay the interests. And one strategy to mitigate the inflationary pressure of an ever-expanding money supply is to convert nature into commodities and relationships into services. To understand the last point, just think about the fact that most of the child care, elder care, and food preparation 100 years ago required no exchange of money. The private banking sector has the monopoly of money creation. In the last 200 years or 300 years, the US government and most governments has ceded a key government function, the money creation, to the private banking sector. And now those governments have to borrow from those they ceded the power to create the money to finance their budget deficit. This means, by the way, that we are all borrowing our money supply and that we have to pay an interest on the money supply every year, which is a tax on the productive economy that continues to concentrate the wealth in the hands of the few. And finally, and most important, somebody has already alluded to this, money is an agreed upon fiction. It's just a set of numbers in computers. And that is also true for investment, liquid investment capital. So, if you look at this from the perspective of an alien, you would see something a little bit funny. You have a beautiful planet with a species that calls itself Homo sapiens, who is utterly dependent on natural systems, and yet it has created this strange number games on a bunch of computers linked to each other that forces it to take whatever natural systems are left, commoditize them, dismantle them, and selling them for parts. And this is really weird. Well, I have a confession to make. 3 years after leaving the finance industry, some of my investments were still participating in that crazy game. And I was sitting on a meditation cushion, not this fancy actually, and I was doing metta practice. It's basically a practice where you send loving kindness to all the living beings around the world. And then it hit me. I am impacting already a lot of living beings around the world with my investments, and they're not taking it very kindly. And so at that point I realized that I had to overcome all my resistance about lack of diversification and the loss of potential return from my portfolio, and completely divest from everything, including large capitalization stocks, all mutual funds, everything for which I didn't have direct understanding of their impact, which meant mostly local investing. And the reason why it was so hard for me, remember I walked away, I aligned my livelihood 3 years before I aligned my investments. Why? Because money in the form of investment capital in our globalized and very intermediated financial system has the power to separate our intention and values from our agency in the world expressed through our investments. And so, I would say at this point, after understanding the big system and looking at the economic and ecological and spiritual crisis we're in, I think that we have to transform all investment capital, not just 1%, all of it, into slow money type capital whose primary intention and motivation is biophilia. And yes, a lot of the current capital and the current phantom wealth will disappear. The values of CDOs built on unrepayable mortgages, most of the student loans, most of the capitalization of the stocks of all companies will disappear. But the capital that will remain will represent true wealth if it is invested in things that create the conditions conducive to life. And the good news is that in this very room, we have enough financial resources and we have a level of awareness that can ignite the transition from funding a suicide economy to funding a life-restoring economy. And the place to start are the 25 entrepreneurs that will be presenting here tomorrow, because the selection process starting from an understanding of their contribution to the fertility of the soil, to the protection of the biodiversity, to the health of their community and local ecosystem, and to their relationship to place and culture. So what we need to do now is take all our capital and align it with our values. Would you join me in investing as if life mattered? Thank you.